Hey, everybody, I'm Samuel Burke, editor-in-chief at realvision. Welcome back to Three Ideas. It's Education Month here at realvision. And so we have a very special week this week looking at the real foundations of investing through the macro lens. And so this is a special edition of Three Ideas where we're going to focus the three ideas around those macro pillars. We're going to have a tutorial on investing in uranium and a special look at investing in sovereign debt. To do that, I have Nick Lawson, the CEO of Ocean Wall, with me. Welcome to the show, Nick.
Thank you for having me, Samuel. Very pleased to be here.
You have a very interesting background. CEO of this company, of course, but also decades with Deutsche, where you still continue. We're going to have viewer questions. If you're watching this show live, Nick will answer them as we go through the ideas. Just remember that this is not advice, and that's not just legal mumbo jumbo. This is really important. Nick's pockets are probably a lot deeper than a lot of ours, and his time horizon quite different. So these are starting points or suggestions that may not match exactly what your pockets have or where you want to go. And for full transparency, Nick is invested in every single one of the ideas we're going to go through today. You could either see that as he's putting his money where his mouth is, or he really wants these investments to do well, or both, probably both. But before we get into the three ideas, Nick, I have to say I'm actually as excited as I am about hearing about your macro outlook, not just because they underpin the three pillars of the three ideas you're going to have today, because you have a quite fascinating, multifaceted look at the world. So what is your global macro outlook right now, Nick?
Well, I don't think I've ever been as excited about the opportunities for alpha than I do now at this stage of my career. And I started in the markets back in the early 90s. I think we're a sort of constellation of factors. We have 40 elections taking place globally this year, maybe more. Now, these are consequential elections for the West. We have a situation now where in a lot of countries, obviously particularly in the US and probably in the UK, you could say as well, you're voting against the existing order. And this is a time in life where public sentiment to government policy is probably at best that it's unproductive and probably in the norm now that it's the perception of corruption, that something is wrong. And I think what's happened has been, and I think from an economic perspective, why this has happened is you've had almost this sort of subterraneous effect for the last sort of 12 years since the Draghi, whatever it takes, bazooka in 2012 of zero interest rates. Obviously, the Fed was complicit in that as well. And I think that zero interest rates has meant that you've had, for that period, a sort of dichotomy between, and it's almost like a Marxist dichotomy between the owners of assets and the renters of assets. Because in a zero rate environment, every asset went up. In those that obviously that didn't own assets became obviously disadvantaged from that. And now we have this sort of like this sort of protracted cumulative effect of this distortion, which has now led us in 2024 to a situation now where people are feeling that they'll want to change regardless of what that change is. Now, I talk about why this environment is so rich, because I think one of the things that's happened now has been with the distrust that exists within the public. People have turned to the internet, they've turned to different sort of like sources of news, such as, the Twitter or X, yourselves. And I believe the information now is in a completely different forum than where it was before. And I think with interest rates at 5%, what we've done is we've knocked out two things. We've knocked out that carry trade. So you can't just make money from anything you do at 0% interest rates. And secondly, you've knocked out zombie companies. So unproductive companies do not work. So I think the paradigm we face now is we've got so much going on, so many sort of exogenous events in the market. And I think at the same time, we're asking more from the companies that we invest in. You've got to be able to beat not just your cost of capital, but probably something more than that to generate return, which means that only good companies are surviving, which is probably why I'm so excited by it. I think, the distortion for me is a positive one, that we've moved to alpha away from just clinging to beta, just to tracking the market. So that would be my sort of, in a nutshell, my macro thesis.
But it sounds like a bit of a contradiction to me, because on the one hand, you're saying, well, the market isn't nearly as awash with capital as it was. We're going to get rid of all these zombie companies that have been out here because of all this capital. They're going to be winners. It sounds like a lot of losers. So why are you excited about that? Isn't there going to be a lot of suffering? Hasn't there already been a lot of suffering? Maybe we've only just seen a little bit of that suffering start. So what makes you so excited?
I think it's a sort of very simple sort of precept or sort of like axiom of sorting the wheat from the chaff. I think what we're doing now is we're really going to be in a position where we're going to reward high quality situations and companies. And I think what it requires is something that probably hasn't been in the market for some time, which is very, very almost forensic due diligence. I was schooled from, poring over company accounts when I started in the markets. I had to start as an analyst before I could move into any other area. The discipline of balance sheet was one that was extolled to us from throughout my time at Deutsche Bank. I think what's happened is that we've in some way become slightly lazy in the way in which we approach things because it's sort of by the dip, all things go up. And I think a lot of what happened recently, which has been obviously immortalized in the film Dumb Money, is the sort of meme stock, the idea of the greater fool, that I'll buy something knowing that the greater fool will pay me a premium for that. I did a speech at a school recently, a big English public school, and everyone wanted to talk about crypto. And when I said to someone, how would I value crypto? No one quite knew. And it all came down to the greater fool of what premium someone else would pay rather than it's a means for exchange, it's a store of wealth, it's a method of value. We slightly lost sight of that. Now, I'm not in any way, because I know, crypto is obviously it's an incredibly important role. But I think what this now means is a return to value investing. And I think, one of the things we talk about, as you alluded to, and this is the uranium, is it's in the middle of almost geopolitical chaos that is going on at the moment. The Russian-Ukraine war, the bifurcation of the West and the East. And so it requires a greater bit of due diligence. And there's that very famous quote, which often gets used a lot, which is the Druckenmiller quote from Soros, which is, when you have conviction, you go for the jugular. And I think when one gets conviction, it's on the basis of finding something where one has really analysed the risk reward and understands the asymmetry of that risk reward and is happy to put that bet on. And I'm not talking here about, you buy something and it goes up, then it goes down the following day and you sell it. I'm talking about term investing. I'm talking about never having to I always say to anyone who asks me for stock recommendation, anyone, always invest what you can afford to lose, which doesn't always make sense. Because obviously we all can lose money. But I feel that, it always should be something where someone looks at duration and term. And at Ocean Wall, we have this sort of like, I've sort of built into it. So I spent time as a partner at a hedge fund doing special situations, is value plus catalyst. What is the value I'm looking for? Am I looking at from the perspective of, is it a cheap metric relative to its peer group? And then from that, what is going to change that? What's going to re-rate that? It can be a hard thing, it could be a corporate action, it could be a soft thing, it could be, just the idea that, the market's perception of the underlying product is going to change. And I always look, everything is through that prism of value plus catalyst.
You're talking about conviction. So before we get into the ideas, the three ideas that you have around, two of which are around uranium, I really want to get your underpinnings for how you see the uranium market. I mean, really a tutorial, a 101. Talk to us for those folks who are coming in for Education Month this month on the platform at Real Vision, don't know anything about it. What's your starting point for helping people to understand this market?
So my understanding, my tutorage that I got was almost a baptism of fire, because I was running special sits at Deutsche in 2006, and special situations is a suitably nebulous term for anything that sits outside of normal equity and normal credit. And we had IPO'd a Deutsche uranium business called Nufcor. It was 10 million pounds in weight of uranium stored in a cave in the south of France, which is called Nufcor. And no one understood the dynamics of uranium. No one understood really which to sit. So it came onto my book. And this was in July of 2006. And then in October of 2006, a mine was flooded that belonged to Cameco called Cigar Lake. And the mine wasn't even online. And yet the uranium price went from $20 a pound to $143 a pound within 6 months. And for me, I couldn't understand the convexity of something that could go from one state of affairs to another in such a short space of time with an event that was taking place. And we began to start analysing uranium. At the time, there was a £72 million in weight surplus in the world market. And it comes back down to, I realised, it came back down to a very, very simple sort of comparison. And so to give you an example, it's Samuel, what price would you pay for this bottle of water today at this moment? Probably £2. What price would you pay in 1 week's time if you had no water? Probably everything you own, and you probably would kill people to achieve that water as well. And that is price elasticity in its purest form for a human. For a nuclear power plant, it's almost identical when it comes to uranium. There is nothing else anyone can put into a nuclear power plant to create nuclear fission than uranium. And that's an enriched form of uranium, which we'll come on and talk about as well. And so what happened in 2006, price having that parabolic move, was the fact that the power stations, they had to have it. They had to have it. And so they would pay any price for that. Now, the input cost for uranium in a nuclear power plant is between 3 and 5%. So really, whether it's $20 or $100 or $300, it's still pretty much the margin. But for a fuel buyer, the issue here is you get fired if you do not secure the pounds. Now, for the US, where 1 in 5 households gets their baseload power from nuclear, the implication of not having nuclear power or not having uranium in your power station is you turn that power station off, and it costs $1 million a day while it's dormant, and it takes in terms of time between 18 months and 2 years to come back online. Now, what does that mean in the meantime? Suddenly, you have a situation where you've knocked out your baseload provider. Is it civil unrest? I don't know. I mean, because we haven't modeled that. And so this event happened, and so just to keep going with the 101, like all good investment banks in the 2000s, we got greedy and we started to structure derivative trades around uranium. And we had a very brilliant guy build a derivative on COMEX. And sure enough, by the time that the Lehman and GFC came, it knocked out all leverage, and it got knocked out. And I'm not sure, Samuel, if I can mention the chart up on the screen. So because it all is all part of the 101. So if you look at that move where uranium in 2006, that's the spike I was alluding to, where it went from $20 to $143. And then it came back down with GFC. And then it really came back down with the March tsunami that hit the Daiichi reactor in Fukushima, in the prefecture of Fukushima in Japan. Although no one died of radiation, the 160 people that did die because of obviously a 100-foot wave hit the reactor. It actually hit a cooling station, which knocked out the kill switches, which allowed the reactor then did melt down. But there was the movement of people. But what it did do to the Japanese, and it also did to the Germans as well, was made them realize that nuclear is sort of what they always thought it was. It's death, it's Chernobyl. And people always conflate nuclear weaponry and nuclear energy. And I can come on and talk about why those are so different. But what happened with Fukushima was we went into this secular bear market. Now, I just want to, on the 101, talk about nuclear energy and nuclear weaponry. But I think this is the key thing. What happens is with uranium, it's mined as an ore, and it comes out of the ground, and it's known as yellow cake because it has a goldish hue. And in it, you have the presence of the isotope U-235. And what you're trying to do throughout the whole process of uranium enrichment is to effectively increase the presence of U-235, which is the fissile isotope. But to do that, you've got to convert it into a gas, and then you enrich it into a centrifuge, and then you have to fabricate it. It takes a very, very long time to do. And what we'll talk about today is mainly on the mining side, but the whole chain is not only takes 2 years to do, it's also very, very fragile. So what will happen and what you'll see is the last point before I come on to the next question is, what you'll find with uranium is because of what it is, nothing happens quickly. Everything's glacial because it is a radioactive material that can only actually be worked on by 6 countries in this world as it stands at the moment. And so because of its inherent qualities, to get it to weapons grade, it's about 90% U-235. Put it into a pressurized water reactor, a standard nuclear power plant, it's about 5% U-235. And to put it into the next gen SMRs, small modular reactors, it's about 19.75%, which sounds an exact amount, and it is. So what you have is they're two very, very different things. But in 2011, the world suddenly went, it's as we thought it was. And so suddenly the world was awash with uranium.
Well, and just to convert that chart that you just were showing into words, I mean, essentially, Nick, the price of uranium has remained below the cost of production almost, ever since then. And you reference Germany because Germany was the best known case. People say, well, we don't want it to happen. What happened in Japan happened to us, and so cut. So how do you bring that to where we are today for someone who's just looking at uranium? They think nuclear power, of course. They know what happened in 2011 with the Japanese tsunami. They know how Germany reacted. How do you reset the stage in 2024?
So you had a huge supply of uranium on the market, not only with the Japanese sellers, the Germans were, but also you had a situation where after the Cold War in Russia had ended in 1993, there was a treaty between the US and the American and the Russians called the megatons to megawatts program, which was to take enriched Russian weapons grade fuel and de-enrich it and put it into US reactors by de-enriching uranium rather than enriching it. And so there was a surfeit, whether it was de-enriched weapons and whether it's Japanese and German mobile imagery, there's a surfeit of pounds. As you quite rightly say, the price got to below $20 a pound. The break-even cost of US mines was around 50. It's actually a lot more than that now. It's around $90 a pound. And so what happened was the whole industry moved on. So just to give you a quick example of that, in 2018 in Wyoming, there were 20 mines that had 32 rigs on them drilling for uranium. You extract uranium for both hard rock and also you to do something called in situ recovery, which is where you mix some sulfuric acid and you suck it up. But these rigs in the US would all move. So there were 20 mines, 32 rigs in 2018. Today there's 2. It's all moved to oil. Because of course it has, because it's an efficient market, and so it goes to where the profits are. So not only do we have this situation where we've had this sort of collapse in pricing, but the mines have shuttered. So back when I was talking about the Nuffield transaction, the global market cap of uranium was about $150 billion. Today it's around 60. So we're still a very much smaller player because that's mines have shut. There's also been consolidation that's taken place. But then something happened. And that thing that happened for me was when I was at a hedge fund in 2018, which was the IPO of a company called Yellowcake, who effectively had the singular sort of modus operandi of buying and storing uranium in its ore format in a place in Ontario called Port Hope, which is owned by Cameco. And they IPO'd on the London Stock Exchange. And I can tell you, Samuel, when I went to the meetings there, you could have them in a phone box. No one was there. No one was interested. Because why would they? We'd been in a secular bear market for 10, 11 years. But then something began to change, and it changed with the idea that this inventory was being removed from the market. So fuel buyers who had been spoilt every time they issued an RFP, every time they went into the market to buy, there was always a million willing sellers. Suddenly, the inventory was being removed. And what we're now seeing, and the big move we've had recently, is a function of open brackets, the fact there is no uranium, closed brackets. And there's lots of different elements for that. And I think probably one of the biggest has been and I used the word bifurcation earlier, the fact that the West and the East are beginning to split. And I think it's along the lines of the fact of, obviously because of the war, but the fact that China has a huge nuclear program. Russia, we talked, I can talk more about this, but there's a book which talks about the Putinization of uranium. Putin has seen this coming for a very, very long time and has been buying uranium assets. So he obviously wants to secure those assets against the West. And that megatons to megawatts program has meant that Russia now is responsible for close to 50% of global conversion enrichment. And as you know, in the House at the moment, they're looking to ban Russian imports of enriched uranium, which is a little bit like Turkey's voting for Christmas, but I can talk more about that. But the key thing, the OPEC plus of uranium producers is Kazakhstan, and inside that is a company called Kazatomprom, and they are responsible for 42% of global production of uranium. So that makes them OPEC plus in their own right. Now, Kazakhstan, which I've visited 7 times, twice this summer, sits to the south of Russia, sits to the west of China, it's to the north of the Kyrgyzstans, the Uzbekistans, the Dagestans, the Pakistans, and then to its west, it has the Caspian Sea, the Black Sea, and the Bosphorus. Now, traditionally, pre the war, uranium would be shipped out to the west through Russia, out through St. Petersburg on the Baltic, that's gone. That's gone. Whether it's through self-sanctioning or through the countries themselves not doing it, we can no longer ship pounds out through through Russia. So how does it travel? Well, uranium now has to go through this tortuous route that takes it through the Caspian to Azerbaijan, through to Georgia, through the Black Sea, and then round through the Bosphorus. So the cost inflation is huge in moving those pounds. But then on the border of Kazakhstan is China, who have built a giant bonded warehouse called Alashanku, who will buy whatever the Kazakhs have to sell. Now, if you get paid cash on delivery, why wouldn't you just sell it to the Chinese, then have to sort of deal with the Azerbaijanis who are at war with the Armenians, hate the French, and going through routes. So I talk about it's class 7 material, it's a radioactive material. You can't just change tack, you can't just ship it through countries that don't have a nuclear policy. So everything's conspired at once: the ending of the inventory, the bifurcation of the West and the East, coupled with the most important thing that didn't happen in 2006, which is the nuclear renaissance. Back in 2006, we didn't really have iPhones, we didn't have electric cars. Now, obviously, we have to have, if we're to achieve our net carbon, our net zero goals, as part of COP28 and every other COP before that, we can only rely on nuclear. We know with intermittent power, if the wind don't blow and the sun don't shine, they don't work. And so we're now in the situation where we cannot afford not to be investing in nuclear. So every country now has pretty much an aggressive nuclear policy to build out, coupled with what Bill Gates and Terra Power are doing, and many other companies, Sam Altman as well, looking at small modular reactors. Small modular reactors effectively are, as they say, modular. They come in a kit format. You can assemble them quite quickly. I can put together one 35 megawatt one, which would be able to power Leeds, just shy of 1 million people. So we have this nuclear renaissance coupled with advancements in technology. As well as that, there is the political backdrop, which is there's now bipartisan support for nuclear. Back in 2006, it was, nuclear was, oh my God, this is terrible. Now we have in the Senate bipartisan support. We have Greta Thunberg talking about how good nuclear is. There's been a vote fast by the Germans. You see how the UK government, Claire Cortino's announcement, the government minister 2 weeks ago about the rollout and support for uranium and enrichment. And so everything's conspired at once to create this huge swell event. And so the alacrity of the move we've seen in the last 5 years, so we've gone from $20, we're now at 106. I think we'll probably go to 250. Why not 1,000? Because it doesn't matter. Now, just one last comment before your question is, I cannot think in my career of any commodity that's gone from $20 to $106. It's gone up by more than 5 times in the course of a couple of years, where supply hasn't come online. Supply is actually being cut. You had Kazatomprom warn, we may have Cameco warn. The 2 biggest producers in the world look like they can't, I don't know this, but they might be buyers themselves. It wouldn't surprise me.
So to simplify all of that, the world's kind of being pulled apart, different regions looking for different energy, and supply is low and demand is going up. I think that's a perfect way to segue.
Absolutely right. So you did a lot better than I did, Samuel, in a short space of time.
Hey, sorry to interrupt again. It's Raoul here from Real Vision. I'd love for you to subscribe to the channel, get the notifications. We have so many incredible conversations with so many amazing people. It will really help you in your financial journey and your journey to understand just what the hell's going on in this world. Anyway, click subscribe, get the notifications, and enjoy.
Well, let's jump into your first idea, and that's the Fission Uranium Corp. FCU on the Toronto Stock Exchange is a mineral exploration company headquartered in Canada. And we'll bring up the first chart so that folks can take a look at this. I think it goes back from 2019 until today. Why this company?
So I got to know Fission about 3 years ago. The CEO, Ross McElroy, is voted Miner of the Year multiple times within Canada. The assets are world-class. The jurisdiction of Canada means that when we have a world now which is going to split between West and East, here we have the most favorable jurisdiction in the world, in North America, where the Americans will be able to buy them. And what you'll find in my uranium picks is they all have a North American flavor. I want to be long North American uranium. I don't want the risk of owning something in another territory that isn't party to what Western ideals and philosophy is. Now, Fission had discovered uranium in 2011. They effectively were flying planes, low-level planes over the Athabasca Basin in Saskatchewan. Now, Saskatchewan is vast. The Athabasca Basin itself is twice the size of England, full of the local indigenous First Nation people, so there has to be a lot of respect for those. Fission do that. They work very, very closely with the indigenous First Nation people who live there. Secondly, the fact is to fly these Geiger counter planes very low over the forestry is to effectively identify boulders. I say boulders, they're about that size, that have radioactive material. When they find those boulders with the Geiger counter, they then look to triangulate from the thawing of the last ice age 10,000 years ago where those boulders have come from. And then what they look to try and do is vector in and find out where those uranium seams are. And uranium is a little bit like a very sort of like different shaped pearl necklace. There's non-conformity. And what I mean by that is you get big lumps, you get small lumps, but really a quarter of the year's supply of uranium in its ore format is something the size of a sort of 5-6 story townhouse. So you have to be absolutely precise. And where they're operating is obviously vast. And what they've managed to do is be able to find an area called Patterson Lake North. So there's two radioactive seams that run through the Athabasca Basin. The one on the right is run by Cameco, which is really an acronym for Canadian Mining Company. They're Cigar Lake, McArthur River, and they are coming to the end of their natural life. Where they have in Patterson Lake North, they have amazing resource and reserves, and we think they could probably add about 135 million pounds of uranium. Now, you value that at 106, where the price is at the moment, and that's suddenly an EBIT number of 1.4 billion, $1.34 billion against a market cap of 1.2. So suddenly, it's less than 1 times EBIT on its available reserves that are there at the moment. And obviously, it's still drilling and looking for pounds. And I just feel at the moment, I think there are a lot of people that will appear, Samuel, on your show and on Real Vision and on X, who will purport to be uranium geologists. These guys have been there since 2011. They've worked with the communities. They won't start mining the pounds, and it shows you how glacial everything in uranium is, until 2029. Nothing moves quickly. So anyone who comes to you with a get-rich-quick scheme, like I've found pounds, we've pegged the pounds, whatever, it ain't true. And I think for me, the reason I selected Fission was because the concept of fiduciary responsibility, both to the local people, their miners, but also to shareholders as well. And you can see from the share price chart, they have returned for shareholders. I think there's a lot more to do, a lot more to go from here as well. And I can't think of better custodians, and I own the shares.
Well, if we go back to that chart, I think a lot of folks looking at that would say it looks like it's had its good run right now. Is this the right time to get in? Can you answer that question? And what's your time horizon?
Yeah, I mean, it comes back to the point I made is I cannot think of any commodity that's gone up 5 times and no supply has gone online. We're dealing with something which doesn't have the normal supply demand parameters, like the price goes up, supply comes online, find an alternative. We wrote a report before Christmas, which is available on our website, oceanwall.com, looking at the risks to uranium, and probably the biggest risk is fusion. So fusion against fission is the conjoining of the isotope 235 and hydrogen isotopes rather than the uranium isotopes. But the commercial application is not until 2040. It's very difficult. I mean, people talk about, we can get seaweed extraction. Well, that doesn't start until $200 a pound. There's nothing out there that disrupts this. Now, you'll probably at the end, I won't, go to the panel and say what keeps me up at night. There are things that keep me up at night about the trade. But I certainly feel at the moment, when I've got a global market cap, uranium, and uranium is not just miners, it's sequesters, people who buy and store it like Yellowcake and Sprott. You have producers like Cameco. You have these explorer producers like Fission, and then you have the enrichers. It's $60 billion global market cap. That's 1/10 of the EV of ExxonMobil. This is tiny. And the apex predator in this trade is the hedge fund. Because when the hedge funds get involved in this thing will absolutely roar. And the reason I say that is back in 2006-07, although it was the fuel buyers who wanted the fuel for their power reactors, it was the hedge funds that got in front of them. And it won't take much to move this because it's such a tiny market cap. Now, we've already started to see Rule 8 disclosures from some hedge funds owning this in certain names. I actually think this will begin to happen. And it comes back to that point, Samuel, as well about alpha. You know, this is pure, unconstrained alpha that sits within this trade at the moment. I think what you will begin to see is people who probably said, "Oh, it's too small for me." I think, well, hold on. You know, and you'll hear this in Mayfair, you know, and out in Connecticut. A lot of people that were saying, you know, uranium was going to make my year. You know, there's a Bloomberg article. I won't name who the hedge fund is. They had a good year last year. They see this and oil as the stocks for the year, and it won't take long until you begin to get that traction. And it doesn't have the liquidity for the hedge funds to fully manifest the trade, which is why it's so exciting for your viewers, listeners, for high net worths, for small family offices and retail investors. But you have to be patient. You can't allow yourself the vicissitudes of the market to disrupt the way in which you're looking at this.
You're very convincing, and you clearly know the market and the players here, but you said there's nothing that could stop this. So what could stop this?
So what could stop this is there's something so terrible that it derails the nuclear renaissance. And that, for me, is a horrific nuclear accident. And to tell you the truth, it won't really matter if that happens anyway, because I think we'll have bigger things to worry about. Now, to derail the nuclear renaissance means that you have to effectively talk about no new builds and potential shuttering. So it'll have to be a safety flaw that so almost becomes endemic with certain type of reactor. But I think what you find now with the post Fukushima and Chernobyl is how safe and secure these are. I think it's very interesting with the bombing of the Zaporizhzhia pressurized water reactor in Ukraine at the start of the Ukraine-Russian invasion. You remember it was being hit, and everyone was, oh, and what people were doing is like, oh no, if you drop a bomb on a nuclear power station, it's a double nuclear accident. Well, that's not true, because one is fuel rods enriched to 5% U-235. The other one is nuclear bomb, which we talked about earlier, is 90%. But what happened was Zaporizhzhia, which is the largest pressurized reactor in Europe, stood up. And there's now features where you can whip out the fuel rods in nanoseconds from these reactors. There's kill switches everywhere. So they're very, very safe. It would be something so horrific that, to tell you the truth, Samuel, I think money would be the least of our problems. I cannot see anything at the moment derailing this trade other than something that, there is one thing, governments. You know, I think governments could suddenly go, right, enough's enough. We've had enough of this. We are going to start sequestering uranium back off companies themselves, but they'd have to pay market price. But it'd be some form of nationalization, I think, would be the thing that would worry me.
I mean, I was going to say it would be another tsunami, it sounds like, but even in your mind, you're saying that you think the safety procedures have improved so much that even that doesn't deter you.
But the other thing as well is nuclear power stations have 40-year minimum or 40 to 60-year plant lives. So even if a terrible accident happens, you've got to carry on fueling the existing reactors. Now, existing demand for uranium is 190 million pounds a year. Supply last year was 135. And that's been going on for years and years because of the break-even costs are so low, mines have shuttered. So you've got this cumulative gap between supply and demand, exacerbated now by Sprott buying uranium, Yellowcake buying uranium, and hedge funds in the market buying uranium and taking it away from the power companies. Now, I think what will happen next is you'll start seeing the nuclear power companies who their RFPs are going unanswered, suddenly going, right, what price do I pay? You know, they're 106 on the screen, I'll pay 130 for pounds. And once you see that print, then the panic takes in. And I'm on record in the Financial Times last year of saying 250. And, you know, people, you know, not laugh, but they thought that's quite punchy. And I feel a little bit like, on the sort of classical analogy, like Cassandra on the walls of Troy. I can see the Greek ships. I'm telling everyone the Greek ships are coming, but people are only just beginning to listen. And as I say, from the first meetings we had 4 or 5 years ago with sort of Yellowcake, you could get everyone into a phone box. Now, people are really listening. But again, I don't think people understand the asymmetry of this trade, that it will move, and it will move in big gap moves as it did back in 06.
I'm just smiling because I just love the Greek imagery that you bring into it. Just to put a bow on exactly.
That's the downside, probably upside of a public school education.
No drama, no Greek drama there. Dean Myers just asking from the Real Vision community, Nick's target price for Fission and timeline for uranium trade overall. I mean, just to build on what you told the FT.
Yeah,
so first Fission.
I think we've got a very long time for this, because I think you can't bring supply back online. So in the US, we've been modelling mines coming back online, and they will do, but we've probably got about £9 million of uranium coming back online within the next 2 to 3 years. And remember, global demand's 190 million. You know, the Kazakhs have already started giving an idea that next month they'll warn on production. You know, they do 30 million is their nameplate number. I think what you'll probably see this going on for some time, but it's going to have its movements. It will have its movements, but I think if you can stay in this trade, as long as nothing terrible happens, I think this could be a 5-year bull market.
Okay, and so any
specific price for Fission, look, you know, it's a little bit how long's a piece of string, because if you believe that uranium goes to 250, then you're saying that the EBITDA number for Fission is 2.5 billion, which means that the valuation of the company is probably, if you say it should be on 5 times EBIT, $10, and it's $1 now. I don't know. I just don't know, because I'm not looking at things from a company-specific target price. I'm looking at things from the uranium top-down view and saying, what's the best way to manifest that trade? Now, there are other names. I love enrichment. Maybe if you invite me back on the show, I can do enrichment in a couple of months' time. But for this call, I think the most exciting thing for Western listeners is North American pounds in the ground. And I don't know whether that segues us nicely into the next trade idea.
Yeah, absolutely. So your second idea is the Uranium Energy Corp. That's UEC on NYSE. That's a US-based production and exploration company operating North America's newest uranium mine. We'll bring that chart up, and it's the same question. Why this company?
So again, it comes down to best-in-class management. So Amir Adnani, who set the business up over 20 years ago and stayed at the helm, they're the largest, they're the most liquid pure play in the uranium sector. The assets are North American. They're permitted, so they can start producing in Texas and Wyoming. The resource base is around £226 million. So you can look at that and times that by the whatever uranium price it is on that day. They've held themselves, and this is the beauty about this, they operate a 100% unhedged strategy. They sit there with unhedged pounds. They can sell when anyone comes along, and they're not locked in at any price, because lots of producers have been locked into term contracts because of the uncertainty in the uranium price. And here we have a company which has no debt, licensed assets, all ready to come online in an unhedged portfolio. So for me, this stock, and I know you'll look at it, and back in 2020, they got down to 60 cents and they're trading at $8 plus now. But again, this is a function of looking at the implied pounds and timesing it by the uranium price. I think on any metric like that, it begins to look cheap. And particularly with the Inflation Reduction Act, with the Nuclear Strategic Reserve Fund, which is only buying US pounds, which UEC have already sold into. They paid a 20% premium last year, which was probably the best trade in the world, because I think they paid $60 and the price at the time on the screen was 40 something. Now, in hindsight, it looked at the time expensive. In hindsight, what a trade with uranium at 106. They have the ability to do that. You know, Scott Melby, who's the vice president there, sits as the chair of the Uranium Producers of America. You know, world-class operatives, world-class assets, 100% unhedged. So this, for me, is the purest play on uranium in the market. Now, a lot of people say to me, but should not own Cameco. Cameco's a big company, but Cameco did the Westinghouse deal. They're moving more into other areas, the nuclear fuel chain, away from the pounds themselves.
So you answered the right now, but again, specifics, any targets that you or Ocean Wall have for?
As a house, we don't normally have targets on stocks. What we do, as I say, we have the thesis and then we look how to manifest that. You know, where could this go to? You know, again, if the uranium price doubles from here this year, $20, I mean, I don't know. I mean, I'm never going to come on a show and talk about M&A in terms of, oh, it's an M&A target. But I've got to say, these are amazing assets.
And what would make you change your mind? I have a feeling you might copy and paste your answer from the previous idea, but prove me wrong, Nick.
I think probably what I'd do is if I mean, it's interesting because you think about Trump coming to power next year or this year, but January, and how that would affect things. Well, Trump is very pro-nuclear and very pro-domestic uranium. It was actually him that reenacted the Cold War policy of the US Nuclear Strategic Reserve Fund. I think it'd probably be if Amir, the CEO, and Scott left, there was a big change at a board level. I mean, I'm such big balls of them as management and how they steered it. So it'd probably have to be a change of management. But really, I mean, Amir's been there since day one. He set it up. You know, I think I don't can't say that, but it'd probably be something like change of management and maybe change my thesis.
Echoes of what Larry Lepard told us when he was on 3 Ideas talking about gold mining also in North America. So very, very similar. Are you operating, just on a side note, under the assumption that Trump will win, not the nomination,
yes,
which of course he won? Are you
look,
he'll be president?
We get a lot of information from people that, they're going to let him fall over with the various indictments that are against him. But I feel at the moment that a lot of people surprise me. A lot of what I see to be quite moderate liberal friends who feel that a strong man is needed. And it probably comes back to that point that we talked about at the top of the show, which was around trusting governments. And I think, whatever you say about him, he does, people don't like him, but he does seem to, give you a sense of he's a strong man and he gets stuff done. So I think I think we all knew how New Hampshire was going to go. I think the way in which it's going to go throughout this year he will be the candidate naturally. And I think he's most likely to win. I think, that probability I saw on spread betting was 2 to 1 that he wins. And I think we're modeling for that scenario.
Yeah, so somewhat anecdotal what you're talking about, but you're the second person on Real Vision to talk about this as a probable outcome, and it's clearly affecting how you're investing. So don't always do the political thing here on Real Vision, but for your next trade, it's kind of inevitable to talk about politics. And this idea is around Venezuelan sovereign debt. I have to say, this one really made me raise my eyebrows when you and I were talking, preparing for this, because there are so many factors at play here. I mean, there was just a UK vessel sent. I think a lot of folks, with everything happening in the Middle East, really didn't keep track of a lot of this, but a UK vessel sent because of border and disputes over oil between Venezuela and Guyana. This is a country that I've spent a lot of time covering in my career. So I was surprised. Just to set the stage for this, it's sometimes difficult to trade Venezuelan sovereign debt, or invest rather. So Nick recommends the FPP Sovereign Recovery Fund. But wow, set the stage here for this, because this surprised me.
I'm probably going to ask you a few questions, because I do know that you're actually famous in Venezuela.
Yeah, well, I got the wrath of Hugo Chavez when I was covering him diligently, journalistically, and sometimes when you do your job well, you get called out by name by Mr. Chavez, but he's not calling out my name anymore.
Well, look, the situation with Venezuela for us was back in 2021. We started looking at some stressed sovereign names, and Cuba was trading at 8 cents, and Lebanon was trading at 11 cents, and here was Venezuela trading at 5 cents. So I thought, well, what I know about Venezuela is it has more sort of oil and gas than Mexico and the US combined. It's got bauxite, it's got gold. We can drill into the number now that we now have of barrel reserves in oil, and it's almost close to sort of Qatari numbers of gas fields. And yet it had gone through this situation where, after the collapse of oil prices in 2014, and this is obviously post-Chavez, Maduro had become a lot more authoritarian. And we saw this massive exodus on the news of Venezuelans leaving. We saw people hungry. We had a terrible sort of political climate. And the country sort of descended into this situation of sham elections. And then ultimately it led to sanctions on the country. by Donald Trump. And the feeling was that this was a Marxist country. And I think inherently, I think there's still a view that it is. I mean, I know since 2006, 3 Russian bombers with nuclear capability have flown over Venezuela. They didn't vote, they abstained in the vote at the UN on the Russian invasion of Ukraine. And you'd had this sort of like US had come in and they'd supported a guy called Guaido, who had been this sort of like puppet in their name, but Maduro was still seen as the strong man. But we began to think about this, and we started to think about, well, what's our downside? If the bonds are at 5 cents and Lebanon that owns nothing is at 11 cents, well, and they're dollarized assets, this looks interesting. So we started to really begin to map the country. And when you look at where it sits geographically, it's not far down from the Gulf of the Caribbean. The crude the oil that it produces is quite a heavy crude that effectively has to be distilled, but the distillation facilities are up in Florida, in the Florida Keys. And then the war happened, the Ukrainian war. And suddenly we begin to start seeing the situation where the world is looking for new sources of oil away from conventional sources. And obviously we have a very uneasy relationship between the Middle East and Biden. Now, if you're Biden, what are your options? You could go to sort of theocratic Iran, no. Or you could go down the road to your sort of like neighbors where you have 600,000 Venezuelans who have already come into your country anyway and start to think about a sort of détente. And so what's happened has been, driven by the oil price, there has been a rapprochement that's taken place in the last couple of years, which effectively was articulated on the 18th of October last year with the suspension of sanctions.
And it's probably just worth bringing up that chart now because it reflects exactly what you're talking about. Continue, Nick.
Yeah, sorry. So the country defaulted, the bonds had traded down, and then the sanctions came on top, and now we're in a situation where the sanctions have been suspended. And what does that mean? Well, the sanctions were quite a tax on US people anyway, because there's a US ban on secondary bond dealing. So all the big US bond houses that owned Venezuelan bonds were suspended from buying or selling. JP Morgan Emerging Market Index that holds these bonds just took them out of the index completely. So not only did you have the sanctions, default, you had JP Morgan selling these bonds as well out of the index, which is why they got to 5 cents. And we began to start seeing, and I can say this with my hedge fund hat on, when you're in a hedge fund and you own an asset that's really priced in cents, it becomes a talking point for your investors. So normally by the end of the year, unless you're massively convicted it'll rally back, you get rid of it. So you began to start seeing people just dumping their positions in Venezuela because they felt that this was never going to end. And now we're in a situation where US investors can buy it again. Now, we have some numbers which we won't talk about today, but we effectively believe that Venezuela will recover rather than need to restructure. Now, previously, when you have distressed countries who have to restructure, they have to go to the Paris Club, to the IMF. Here, you have a very, very rich country, and we actually work out that if they do 1.5 million barrels of oil this year, up from 700,000, that effectively computes at about 130 cents in the dollar. Now, they're trading at 21 at the moment. Now, that, for me, again, is the kind of asymmetry I like, because I can sort of understand that even if Trump does get into the White House, as we believe he will do, again, he needs cheap oil and gas, and you have your neighbors down the road. And there's another thing as well about repatriation of folk, which is, Venezuelans probably want to go back, to be perfectly honest. It is historically a socially democratic country. There's elections that take place this year. Now, the opposition party is a lady called Marina Machado. Whether she gets elected or not, we're beginning to take proper stabs at democracy within this country. If you go to Caracas now, it's very, very similar to Moscow in 91. It's casinos, Ferrari garages. It has a sort of like a frontier town element of it as money returns. Chevron are there, Repsol are there, Shell are there. So we're beginning to start seeing, a reopening of this country. Now, if they do, as I say, begin to start producing oil, they won't need to restructure their debt. Now, we reckon that par plus accrued, so par being 100, accrued interest on these bonds is 60. That's 160. So it comes back to this idea of asymmetry, that what's my downside in dollarized assets?
Everything that you're saying rings true for me, both journalistically and anecdotally. I have a lot of close contacts, even people still in Caracas. I know things are getting back to normal as they could be in this time span. But the thing that I'm trying to think about here is, well, the sanctions have already been lifted. So are you, what's the next
That's a
catalyst?
great point. They've been suspended. They've been suspended, and they come to an end on April the 18th, and we believe with very high probability that they'll be extended again. So we believe that what's happening is, as I say, this rapprochement, but it's a backwards and forwards. I mean, Maduro has done some crazy things, as you talked about. The Essequibo land that sits between Guyana and Venezuela, which is incredibly not only very fertile but is full of oil, has been a arbitration point since the 19th century when the British ceded it to Guyana. So now we have a situation where we've got Maduro doing crazy things, but that seems to have taken a bit of a back burner. I think he's realised his unpopularity with this. Now, whether he wins free and fair elections and comes back into power, there is still this issue that the US need to keep Venezuela close and away from any Marxist influences and to keep that oil for themselves.
So really what you're saying is, kind of, in spite of whatever happens in Venezuela, the fact that America is going to be so desperate for oil is going to continue to be even more so, is really overrides whatever happens, whether it's really free or really fair elections there.
Again, you've done it in a nutshell. Absolutely right, Samuel.
And I'm just wondering, any type of targets you have? We had that chart up.
Yeah, I mean, I think let's be conservative. I think so. Let's have a base assumption of 1 million barrels a day. I think, and maybe some sort of restructuring, some haircut in the bonds. I think 75, 80, so 4 times money.
And what would make you change your mind? I'm sure a war with Guyana, even though that looks unlikely.
I think it'd be something bonkers. I think it would be. I think you'd probably, and I have another view on Russia. I don't think they'll come back to the fold, but it'll be if Russia come back to the fold, and because I think if you hadn't had the Russian-Ukraine war and the Arab or the Arab situation as well as it is at the moment, all would probably be $10-15 a barrel. We're not shy of it globally. But I think because of the geopolitical tension, because of the logistical issues, because of the way in which we're polarizing as a world, I think it would almost have to be a welcome breakout of peace, which would probably change my thesis on Venezuela. But the country's growing at 10 to 15%. It has a huge amount of agricultural land. It has a huge amount of mining. As I say, it's got bauxite, gold. It has a huge number of other assets. So really, it should be a recovery plan itself. So I'm quite comfortable in this trade.
Yeah, it's interesting because, like I said, I've anecdotally heard a lot. I still report quasi in Venezuela. And so it's the first time I've really heard investor sentiment start to match or catch up to what I've seen anecdotally, the casinos that you referenced. I just want to go back to uranium for a bit. I think you're going to say you can't answer this. You might be restricted. But Dean Myers asking his second question. Nick didn't cover ASP isotopes, but I know he likes it. Curious to hear his thoughts on ASPI versus Silex and as enrichment plays.
I can't talk about it, but I love enrichment. I think the way in which enrichment process works is you have to convert it to gas into a centrifuge. The centrifuges that exist in the West now are limited. They require 6 years of capex. I think we're going to start looking for next gen. And a lot of that, I think, will be around laser excitation, which is a way in which you excite the isotopes to effectively move U-235 to U-238. There are some very interesting companies out there, but I can't make any comments on any of them at the moment. But I do think enrichment is part and parcel of our uranium thesis. And that we've written on enrichment on our website, which, as I say, oceanwall.com, you're more than welcome to take our research. We don't charge anyone anything for anything. That makes sense.
Yeah. And then lastly, a question also from the RV community coming in, this one from Jason Kabuki. Is this the year that we all realize the world is going fully electric? And what does that mean in the markets for oil and EV producers?
I don't think, actually. I really like lithium carbonate. I really like the Copasa in the north of Chile. I really like the Arizaro region of Argentina for lithium carbonate. But I actually feel, as someone who has had an electric car and got rid of it. I had a massive issue with what do they call it, range anxiety or anxiety or something. But I had an issue with range on the car. The atrophy of the battery life was too quick for my liking. I think we're some way off that, but I think the future for that lies in China. I think it's coming. But in terms of the year we go electric, I think for me it's about energy rather than about anything else. And I start looking at some of the stuff that Sam Altman's doing in uranium, and you understand the amount of electricity that's going to be needed to power AI, and you start believing that we're there's going to be a big change here in terms of demand. But I think the electric car, I think we're still a couple more years off really fine tuning that.
Yeah, I don't disagree with you. I just say, as an American living in the UK, and because I go back and forth so often, the gap between the US and Europe for electric charging stations is actually quite big. The US is way ahead here. I should really say Tesla, because it is just Tesla at the end of the day in the US for the most part. And this has really been excellent. I think for anybody who's wanted to get into uranium or better understand uranium, this is a great starting point for them. So Nick Lawson, thank you very much for coming on 3 Ideas, answering the questions from our community. We'll be keeping an eye on uranium as well as Venezuela, and hope to have you back on the show soon.
Thank you, Samuel.
Have a great one.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.